Welcome back. I'm Olivia, Florida Man's AI assistant. Today, we are exploring the intriguing topic of how little Bitcoin is left in the world. With Bitcoin's fixed supply making it scarcer than gold, this scarcity is a key driver of its value. But amid recent market turbulence, let's break down the latest news, sentiment, and what it all means for investors. First, the story on the topic. Bitcoin was designed with a hard cap of 21 million coins, ensuring ultimate scarcity. As of now, approximately 20 million Bitcoins have been mined, leaving just about 1 million remaining. These final coins will be released gradually over the next century through mining, with the next halving event in 2028 further reducing the issuance rate. This built in rarity is what sets Bitcoin apart from fiat currencies that can be printed endlessly. Recent articles highlight how this scarcity is influencing the market. For instance, in one report from the block, Bitcoin's price slid to near $87,000 amid fears of a United States government shutdown, reflecting broader risk-off sentiment despite the asset's limited supply. Another piece from CoinDesk notes Bitcoin rebounding slightly from a monthly low of $86,000 to around $88,250. But the trend shows lower highs and lows since October, suggesting potential reversal. MicroStrategy, a major corporate holder, added 2,932 bitcoins last week for $264.1 million, bringing their total to 712,647 bitcoins, valued at about $62 billion. This corporate buying underscores confidence in Bitcoin's long-term scarcity value, even as the price hovers around $87,500. Additionally, CoinDesk reports gold surpassing $5,000 per ounce, while Bitcoin stalls, highlighting a split where traditional havens like gold benefit from geopolitical risks, but crypto faces supply overhang from older holders selling. Finally, key price levels from another CoinDesk analysis point to downward pressure, with Bitcoin down 30% from its all-time high of over $100,000 in October. Shifting to today's overall crypto sentiment. The mood is decidedly bearish. Bitcoin has dropped around 2% in the past 24 hours, trading near $87,000, with over $744 million in liquidations hitting long positions hard. Holders are realizing net losses for the first time since October 2023, according to analytics. Derivatives show stress, with high demand for short-term put options and volatility spikes. Altcoins are outperforming slightly, but the broader market reflects caution, as crypto acts more like a risk asset tied to equities rather than a safe haven. Social media and market scores rate sentiment at about 4 out of 5, but the price action tells a story of waning enthusiasm amid macro headwinds. Now, let's look at the macro drivers influencing price. Today's articles emphasize several key factors. Fears of a United States federal government shutdown by Saturday are looming large, with prediction markets putting the odds at 75% due to stalled congressional negotiations over funding, particularly for the Department of Homeland Security. This political uncertainty is spurring risk-off moves across markets. The upcoming Federal Reserve interest rate decision and producer price index data are also in focus, adding to policy jitters. Spot Bitcoin exchange traded funds saw $1.33 billion in net outflows last week, the worst since February 2025, signaling softened institutional demand. Delays in passing the Clarity Act, a major crypto regulation bill, are contributing to the dour outlook. Geopolitical tensions, including tariffs and conflicts mentioned in President Trump's Davos speeches, are boosting gold but weighing on crypto. A weaker United States dollar and central bank gold buying further widen the macro crypto divide. In summary, Bitcoin's scarcity remains its superpower, with only 1 million coins left to mine out of 21 million total. This fundamental makes it a compelling store of value over the long haul, potentially driving prices higher as supply tightens. However, short-term pressures from government shutdown risks, Federal Reserve uncertainty, exchange-traded fund outflows, and regulatory delays are capping upside and fueling the current downtrend. Keep an eye on support levels around $87,000 and below, as a break could lead to further declines. Stay vigilant, diversify wisely, and remember that volatility is part of the crypto journey. Florida Man will never ask you for money or contact you outside of comments. Hit the like and subscribe and check out my Patreon to stay up to date on things not discussed here.